Hi, this is our Forex blog for April 17th, 2013, and these are our currency indexes, which I've created that aren't available elsewhere, and they pretty much show you what the trend is of each individual currency, and then you just simply look for the strongest to buy against the weakest, or if the weakest one is on top, like the pound right here when it's breaking down at 4.30, you want to sell that versus one of the strongest. At 4.30, you can see the dollar's above its hourly moving average, as is the yen. The yen has a daily trend that's in a down phase. The dollar's slightly up. So obviously 4.30, you'd be better off selling the weak pound versus the strong dollar. And you can use any intraday time frame chart, 2 minutes, 3, 5. You can use range charts, which are 3, 4, 5, 6 pips per bar, or tick charts. We'll put the pound dollar on here and look at it at 4.30. Very high probability trade. Here's 4.30. And in fact, this one broke from above to below the hourly moving average. Couldn't get back above it. So when it broke down from this area right here at 3.30, it's one of the higher probability trades. It went down to our lower containment bands. You got short again here. And most of the time, underneath the 2.0 lower band, the market's going to reverse. So I just trail my stop above the bar's high. And when it's going sideways right here, I'm out. I wouldn't personally get into this trade because it's too far underneath the lower band. Usually what happens is it goes down a little bit and then shoots up, and you either have a super tiny win, or if you're not quick and agile and get out quick, you have a loss for no reason. So, if it retraces back to the lower band after a little bit later, I would consider, taking that trade. But you always got to be aware of risk. I was a little bit off earlier in the time frame here. The pound went from above to below its hourly moving average at 2, and then it went sideways, couldn't get it back above it, broke down at 3. So 3 o'clock was the actual time when this was very likely to go down. This is the weekly point of control for the pound. That's the price most traders have positions during the previous week. And obviously when that gets broken, anyone who's long from the previous week that has a longer term position is now losing money on most pound pairs. That's going to cause downward pressure on the pound. And basically you can sell the pound versus any currency really that's above the hourly. This one, the euro, the Swiss, the Australian just broke above it, but notice the daily and weekly trends very weak. Same thing with the New Zealand. So at 2 and especially 3, when it starts to go down, you can sell the pound dollar like you just saw. You can also buy the euro pound, and you can also sell the pound Swiss. So let's just briefly showcase those other charts right there. Euro's strong, pound's weak. 2 o'clock, 3 o'clock, you're looking to buy. Here's 2 o'clock, it found support at the hourly right there, or you could just wait for it to go above the high right here. Small win there. A little bit after 3, actually a little bit after 4, it takes off. And again, this is what normally happens. When it's above the upper band, typically it's going to reverse pretty soon, especially when you see the perfect oscillator over 80. More than likely, I'm just going to get out of that trade probably right here. I would have missed the extra 10 pips. But that's the key to trading, is have big wins. And when you get into breakout trades like that, typically I put my stop right here. Very, very tiny loss when wrong, and big wins when right. And obviously not all your wins are going to be 2 times, 3 times, 4, 5, sometimes 10 times bigger than your losses, but you are going to get those. And you want your average win to be 1.5 to 3 times bigger than your loss. And then you don't even have to worry about being right half the time. You can be right 35, 40% of the time and still make money trading. So I'm going to go over some anticipatory ways of using our currency index. Here's the same currency indexes, but we're looking at the 4 major ones that most people trade: the dollar, the Japanese yen, the euro, and the pound. And the charts are bigger, and I've also added the FX trend intensity, which is one of our better tools that shows statistically how strong or weak currencies are. Anytime that they hit the 80 level, it's extremely strong, and most times when the 40 level gets hit, that trend's going to continue. Plus, you can also see very clearly on the chart up moves and down moves and intensities. So when you have an up move that's stronger than the down move, guess what? It's very likely to go back up. And of course, when this breaks out right here, the trend's up. 530 is a good place to be looking to buy the dollar. So what would you want to buy the dollar with? Well, the euro is strong at that point, and you can use trend lines. You can spot double tops, double bottoms. As long as the euro kind of stays above this trend line, you can look to buy it. The dollar's trending up too, so you wouldn't really want to trade the euro dollar until this one breaks down or the dollar breaks down. And obviously you saw the pound just going down all day. And there's a lot of patterns you can take. Anytime you see a rectangle sideways pattern like that, when it breaks down, it's very good. Anytime you see it break through a support area and then can't get back above it, that's a very high probability place. And we'll look for some of the other ones. By the way, the yen broke from below to above the hourly, came back down, went slightly underneath it. When it broke back above it here at 5, pretty high probability. A lot of times you have double tops. This is a pretty decent place to shoot for the yen to go to. Keep in mind the daily trend's down, the weekly trend's up, the monthly trend's down. But the pound is just falling like a rock. So at 5 o'clock right here, pretty decent place to get short the pound yen. Because usually the pound yen will work its way down to the first lower containment band or the second one, and occasionally it'll go underneath it. But you have good room to run for this one, and this one's right in the middle of the range. It could shoot all the way up to the top, which is a possibility. It didn't in this case, but we don't care. If this one, is falling, the other one's going up, you're usually going to make 20 to 50 pips, and that's going to eat up a lot of your 6 to 10 pip losses, even in the pound yen. So let's bring that up and look at that. Now that was 5 o'clock when the yen went from being weak to being strong, and you can see it's finding support here at the hourly. And typically when a currency is trending up, it'll come down, hit the hourly, and go back up. When it comes down and can't go back up, which you clearly see on this chart, it can't get any kind of significant bounce off of this hourly. Comes back down it again. We have a lower high here than before. It's a no-brainer trade right here to the downside, and you knew about it coming up to 5 o'clock. And this breakdown really happened about 5 to 10 minutes after 5 o'clock. So using the currency indexes, you had a 5 or 10 minute window to bring up the chart. I mean, most of our traders already have them running, and you can have up to 20 different layers and different time frame charts and so forth. You can show and hide layers at will, and you would go short right there. And usually you want to draw your fibs off of this to get an idea of where your fib profit targets are. The joy of trading this way is you put your stop, typically I'll use a range chart or a tick chart. Most of the time I only have an 8 to 10 pip stop, so I probably would have a super tight stop like that. But you could even put your stop above the previous bar's high right here. This is your risk, and this is your first profit target. This is your second one. Usually I'll get out of the whole trade at the second profit target, especially when it's near the lower bands. But you can see the likely profit targets, 1.5, maybe even close to 2 times bigger than the risk. And especially the risk that I would take, very tiny. I'd rather be wrong, take a tiny hit, get back in again. Even if I lose 2 of these, it pretty much matches what a lot of traders use with wider stops. And some of the trades, like this one, even with super ultra ridiculously tight stop, don't get hit, the market goes down. And the more you trade with our indexes, the more you'll realize that it happens frequently. It's not a normal occurrence. So let's draw regular trend lines on the chart here. As long as the euro is above this trend line, you can look to continue to buy it against whatever's weak. Of these 4, the dollar's strong, the yen is now strong, the pound's weak. So you're really trading the euro only against the pound. You're selling the pound against all the other 3. But if the euro breaks down underneath that trend line in the hourly, you can consider selling it versus whatever's stronger, whether it's the yen or the dollar. I personally would prefer, and always base my decisions, because I like to trade a lot of lots. I like to trade the ones that have more statistical daily, weekly, and hopefully monthly trend. This one has a strong daily trend, weekly trend. The daily trend of this one's still down, and it's underneath the point of control. This is the average price of the yen for yesterday. So underneath that, it tends to go down. And currencies tend to be very choppy in between the point of control and the hourly. So this is kind of a chop zone. I will try to avoid it whenever possible. This one's also in the chop zone. However, it did find support here at the hourly and did a retest. It also had an opportunity to come down again and also could not break down underneath the hourly. So this one's very likely to go higher. So let's scroll forward on these charts and we'll kind of get a feel for what to do. So you can see this one found support at the hourly and bounced and made higher highs for the day. This is the previous high of the day, the dotted green line. Came down and found support there again and then broke down. So you could actually look to sell the euro once it goes underneath this low, which is somewhat early into this bar. It closed right here, but early into this bar you'd be looking to sell it at 6. You wouldn't want to sell it against the pound because it's weak and it can definitely go lower. If the pound shot up here, obviously you'd make money selling the euro pound. But the dollar and the yen looks like it's really about to start to go up. You can see also it had the most intensity here at 4, pulled back. I would take a euro yen sell around 6, and I'd also watch the euro dollar. If as you're scrolling forward, you see the dollar break out above the point of control, you want to go long there. So let's, and I was right by looking at this. Look, one bar up, this one went up, this one went down. You're going to make a decent amount on that, 1.5 to 5 times or more your risk, and that's really the key. You can use a tick chart, range chart, 2-minute chart, 3-minute, 5-minute, whatever you want. So let's look at 6 o'clock on here. First thing to notice on this is right at 6 o'clock, the hourly is getting hit. When it breaks down underneath that hourly, you go short. And on a range chart, this is a pretty decent move right here, or a tick chart. You might have got in this, made 10 or 15 pips here, waited for the pullback, got short again. The second trade is the one that made the most money. Typically, when you get a pullback to the lower band, you're going to get some kind of a bounce. Or if it doesn't, like in this case, goes down a little bit more, when it starts to go sideways, you get out. And wait for it to go back to the band. If it only went up a little bit, it's debatable whether you should take the trade. But if it works its way back up to the band, another great place to sell. And notice our perfect oscillator as at plus 80. This thing is very accurate, and that's why I called it the perfect oscillator. It doesn't use periods, look back. It uses statistics for each currency. And anytime you have a strong trend down, it's a no-brainer to sell when these things hit the plus 80. Whoops, I'm sorry, I was trying to put that on there. So notice the plus 80 there. Notice the plus 80 here. And the market went down about 20 pips there, right here. You can see most of the time when this plus 80 gets hit, notice here. Now it's in an uptrend then. You have the exact opposite here. A buy right here at the hourly because the short-term movement was down too much statistically. Very high probability. When the trend's up, you would buy here. Once the trend's underneath the hourly and it's down, you're looking to sell. It only takes one nice trade like this where you get in this case 150 pips. How many losses does that get rid of? And it's very easy to predict that using our currency indexes, because you can actually spot now when a trend line gets broken, or when the hourly moving average gets broken, or when a currency can't get above and stay above the previous day's high. So let's scroll forward and see what happens here in some of the other potential trades. Notice this trend line, when it got broken, came up and touched it. Again, very high probability. Notice the weakness, the weakest it's been all day. The up move had almost no strength. And so this, when you see the chart and you see trend lines get broken and you see incredible statistical weakness, no strength on the move up, I don't know how you can't just sell that there at 7. And you can draw your fibs on here to get an idea of profit targets, typically the 1.3 to 1.618. If you're short the euro dollar or euro yen, when it hits this level, you might want to get out. So let's take a look at some of the other currencies. I'm going to make all these orange as well so that we can scroll back on the charts and they'll all scroll back together because I have it in demo trading mode. First things to notice, like I said before, when currencies are in between the hourly and the point of control, it tends to be very choppy. You're better off taking a stab at it, a short here, 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 and here. And it only takes one decent sized trade to get back your losses. And a lot of times when these things are breaking down, If another currency is going up at the same time, you're going to make money even though this trade kind of went down and went sideways. If one currency is going up and one's going sideways, you'll still make money on the trade. If one of them goes down and goes sideways and the other one goes sideways, you might break even, you might have a small loss, small win. It's debatable. But if one currency goes sideways like this, and eventually down, most of these trades are going to be profitable to break-even trades. Notice the choppy phase here, here, and here. Once it finally breaks out above there, you know, the New Zealand, pretty high probability at 730. Now we know that the euro was weak at 730, so why not look for a euro New Zealand sell at 730? Now most people don't trade this pair, and I don't trade it too often per year because there's usually other opportunities that have lower spreads and so forth. But at 730, this is a very high probability trade, and here's 730, or maybe it was a little bit before 7, but regardless, you got a short right here, it fell, short right here, it fell a little bit, and then you got to pull back up to the hourly right here, which exploded down. Let's scroll forward on those currency indexes to see what happened with this trade. 730, this one broke out. I'm not sure if the euro, let's bring the euro back up. At 730, this one was kind of going sideways to up. So that's, if you were watching this at 730, you can see the New Zealand started to inch its way up, and this one's just going sideways and up too. If two currencies are going up, you might, you know, make a few pips, you might lose, you might break even. You never know. You want one to go down and one to go up. And the reason that that first trade or two in the euro New Zealand didn't work is because the euro found support at the fib target, and it's likely to get a bounce, and it did. And of course, it's pretty easy to just simply wait for a pullback by drawing your trend lines underneath there and waiting for the trend line to get broken. All right, especially once it gets hit once, twice, you're short this trade right here at 935. Let's go back and look and see if 935 the New Zealand's going up. So this one's been trending up. It's pulling back, finding support here. A little bit after 930, it goes up again. 935 to 940 is a much better place to be selling the euro New Zealand. So here's 945 coming up right here. This one's right near a resistance area. You draw a trend line on this too, just to always make sure the price confirms your suspicions. If you do that, you'll avoid a lot of losses, unnecessary losses, and you'll never miss a win, because if it doesn't start to go down, you never get in. Let price dictate when you get in. And lately I've been drawing trend lines on charts and then just disappearing and letting the computer trade it for me, with just incredible success myself. And we're thinking about putting a MetaTrader plugin in that will allow you to have alerts on a trend line get sent as orders to MetaTrader. I use a different broker other than MetaTrader platform. But if you right click on the chart and you hit create alert, you can have it send you a cell phone alert, email, you can have it play a sound file. And what I do on mine is if I want to sell it through my system, I'll put sell in here. And once that gets triggered, it actually sends an alert to all of our scripts. So if I have a script on another chart that is looking for an on alert from a trend line break, it gets hit and it checks to see if that other chart has the same symbol as the alert trend line, and then it sends the order. So I'm thinking about putting that in there for our traders as well, so you can just simply draw your trend lines, go to sleep, wake up, and then you would have a trailing stop, trail it. Some of the trades are going to be astronomically huge wins like this, and other ones are going to be 5 to 10 pip losses, and you're going to have a bunch of 5 to 15 to 25 pip wins too. But you are going to catch some very big wins as well. And I'll just show you some of the ones from last night from my own trades. Euro dollar, it was in a very sideways range, so if it went above the high, I wanted to buy. It never did. If it went below the low, I sell. And you can see if I right click on this other one that you'll see it actually has a buy order in there, and this one had a sell order in there. Once it gets triggered, it changes it to yellow. And you can have an on touch send an alert, or a bar close. Now, a bar close on a 30 or 60-minute chart can take a while to get your alert, so I just use an on touch. I want to be in as soon as it breaks because I have such tiny stops. Honestly, I don't care. There's another one that got triggered last night, Euro Yen. You can see this one fell 100 and something pips. I didn't catch all that, but nonetheless, when trend lines get broken, you will find huge wins. This one got broken to the downside, huge win. That was the best trade I had all night. And then the last but not least, the pound yen. I drew this trend line right here, and it got broke, and it trended down. So it's a very easy way to trade, and you can use trend lines even without our software as another easy method. And the reason it works is because all the biggest traders in the world use trend lines because they work.